it's not a surprise here, right? We've sort of had this drip that this was coming in recent days. But what do you think of DeMauro as the choice? And I think, there's some questions about whether it's going to stick this time, because this is the second attempt at putting the head of Parks in charge of the company.
Yeah, absolutely, Julie. Thanks so much for having me. Yes, this has been a long time coming, but I think this time things are a little different. I think Wall Street now realizes the importance of the parks business. I think it was a little bit underappreciated last time around, and we've really kind of seen the whole composition of the Walt Disney Company change. I mean, this is a great portfolio of assets. It used to be mainly a cable network company with a great film studio division. And there were some theme parks, but that has completely changed. I mean, just a few years ago, theme parks were about 35% of profits. Now they are about 60% of profits. So there's, it's very, very clear that, parks are going to be the main profit engine for this company going forward. And I think having Josh DeMauro kind of take charge here really kind of underscores the importance of that division and just tells us how important the strategy for parks is going to be going forward. I think this time is different also because, they finally, I think, got a handle on the streaming business, which was what the problem was when Bob Chapek took over the reins last time. And I think, though they do have a good strategy in place, and having Dana Walden now as the chief creative officer should kind of keep that engine running too pretty well, Julie.
I was surprised a little bit by the timing of this, Geeta, that it's effective March 18th when the company has its annual meeting, because there had been talk that Iger would finish out the year. Were you surprised by that? And what is that? Is that sort of a signal that Iger's ready to step out of the way?
I think he finally is ready to step out of the way. I mean, he seems to even signal that he wants to do that so that the new CEO has breathing space, can kind of figure out his own path forward and his own strategy. Because last time, remember, he was criticized for kind of lingering on as Bob Chapek tried to find his way. And that might have eventually kind of, ruffled some feathers, caused some friction. We really don't know what happened. But I think this time he really kind of wants this clean cut, Julie.
As you mentioned, the other sort of main contender for this job, Dana Walden, gets a new title today too, President and Chief Creative Officer. And she really is viewed as someone who has deep ties to Hollywood's creative community. Is this title enough to get her to stay at Disney?
I think it is. I think she also realizes the importance of the parks business. I think naming her as CEO, yes, it would have been great for, the creative part of the business. I mean, Disney at its core is really all about telling stories, and she knows how to do that very well. But when it comes to experience at the parks, obviously she doesn't have any. So I think she understands that too. Having her, I mean, this is a historic role. Disney has never really had a chief creative officer before. So I think it definitely elevates her kind of, I think should definitely keep her in that position, and she should probably stay on, hopefully.
And then I guess my other question is, what does DeMauro need to do to help the stock break out of the doldrums? It's like 4 years now going on where we've seen mostly sideways movement from Disney.
Yeah, I think this up and down with the domestic parks. So we've kind of seen, attendance really kind of go up and down quite a bit. It's bounced around. We saw that huge surge post-pandemic, but then the past few quarters, we've kind of seen, macroeconomic concerns. We've seen softness from international visitations. We've seen competition from Epic Universe. So there has kind of been this perfect storm a little bit, and then now you have the weather and all of that kind of playing into, lower leisure travel. But I think what is really good in terms of Disney is, yes, it's not a linear path. I mean, you're going to see a lot of lumpiness. You're going to see a lot of volatility quarter by quarter. But then if you kind of just zoom out and look at the picture long term, they have all of the growth drivers in place. So remember, they do have the $60 billion capex investment in the parks business. The cruise capacity is going to double. And Julie, as we just look even to fiscal 2026, I mean, 40% of the growth in parks is going to come from new cruise capacity. And so I think as we kind of see that reflected in the numbers, the valuation, I think, we are going to see a re-rating of multiples. It's just going to take a little bit of time to play out. And of course, the other big wild card is going to be streaming. As soon as they kind of show greater pricing power, more streaming profitability, higher margins. Again, that should drive multiple expansion as well.
I mean, I've been enjoying Wonder Man as of late on Disney Plus, but I was already a subscriber, so I'm not making them any new money. The other wild card, it seems to me, is the consumer here, Geeta, because as you well know, it ain't cheap to go to those Disney parks. Disney cruises, I know cruises across the board, not just at Disney, the selling point is the value that they say people get on those vacations, but how vulnerable is Disney to particularly lower end challenged consumers here?
Yeah, I mean, there's always that vulnerability, Julie. I mean, this is a cyclical business. There are going to be some ups and downs. But I think overall, they are very well diversified, even in their parks portfolio. Yes, there's no doubt domestic parks are a huge portion of that parks business. But then, of course, you again have that diversification with the international parks. Remember, there is this huge expansion that is happening internationally. In fact, on March 29th, we have the World of Frozen opening in Disneyland Paris, which basically doubles the capacity of that second Disney park there. So, they're doing a lot of different things. Yes, you are going to have a little bit of bumpiness, but I think overall, as you kind of zoom out and take a step back, they are in pretty good shape as well.
Geeta, thank you so much for hopping on here with quick reaction to that breaking news. Appreciate it.
Thank you.
So let's just start with Josh D'Amaro, Matt. I mean, you know this company backwards and forwards. So what did you think? Do you think Josh is the right guy? He's got the right resume, background, experience, Matt. This is a good fit?
Yeah, well, thanks for having me, Josh. We do think that this is the right pick. It was pretty widely reported that Dana Walden and Josh D'Amaro were the frontrunners for this role. We think each of them had qualities they brought that actually the other didn't, and either would have been fine choices. But we do think D'Amaro was the better choice for really one simple reason, and that is experiences, which is where Josh D'Amaro has his experience, is the most important part of Disney. It drives most of the profit, closing in on 60% each year. And it's a growth business as opposed to entertainment in general, which is shrinking. And if Disney needs to rely on entertainment, it's in bigger trouble. Relying on experiences is where Disney is especially healthy. And not that they aren't both important, but with experiences being especially critical, if you had to pick one, which, by the way, we do think one was the way to go as opposed to co-CEOs, Josh D'Amaro was the choice in our view.
There's some pushback I've heard, Matt. I wouldn't even call it pushback. I would just call it a point some folks are making is they'll say this. I'd love to get your take. They'll say, listen, Disney, they'll say, is first and foremost, it's a content company. It's all starts with that very valuable, sought after IP. And they'll say D'Amaro, he's an operator. He's a parks guy. What do you make of that? Is there any kind of tension there?
I don't know if tension is the word. It is really the exact reason why I said each of the candidates brought something that the other didn't, because you're right. That's what Josh D'Amaro lacks a little bit. As far as Disney being a content company first and foremost, yes, the content starts everything, but Disney has a lot of that already established, and not that it doesn't need more, and not that the other part of the business isn't important. And that's why neither of these candidates had maybe the entire package that one might want. And I don't think anyone does for a company like this. But Experiences is set up to grow with a lot established in place already. And that has to go right for Disney's stock to be successful. And again, don't get me wrong, streaming, especially as traditional television continues its transition, is extremely important. But the profits come from experiences. Disney does already have a lot of IP, established franchises that give it a good base. And continuing on the growth trajectory with what already Disney has in place with experiences is the most important thing for this company. And by the way, that's also why we thought it was really important that Dana Walden is staying on. She got a little bit, bump in her title, a nice pay package, and she's staying. And it's really important for her to have her there because both of these businesses are important. But we thought choosing one was the best, and either was going to have pros and cons.
And it looks like, Matt, D'Amaro takes over in March. So coming up fairly quickly, is that sort of the rough timeline you imagined?
We had been thinking it was probably going to be later in the year. Bob Iger's contract goes through December 31st. In recent weeks, it was reported that he'd probably leave earlier than that. We knew that this announcement was coming. I didn't think it would happen this quickly. Seems like by the next earnings call, or Yes, by the next earnings call, we will have a new CEO. So that's not what I was expecting. But it did seem like they weren't going to wait till the end of the year. And it's been so long awaited, well established that the transition was coming this year. It's not something that really strikes me as something to put too much thought into it. It'll be nice to just have it finished.
Matt, how much confidence do you have that this transition, this handoff, that it does go smoothly, Matt? It does go as planned? Because as we know, of course, there's been issues in the past with Disney and Succession. Do you think this time is different? And if so, how come, Matt?
Well, for one thing, it appears to be a much, much more deliberate, thought out process as far as who would take this helm and the candidates that were considered going into it. As far as whether it will go smoothly, our expectation is yes, it will. And we think having the established people in place and leading the respective areas they do, again, with Dana Walden continuing to play such a prominent role on the creative and in the entertainment side of the house, should help. But there is always risk with the transition. Being that these are internal candidates familiar with Disney, with DeMauro being so experienced and so critical to the success that Experiences has, which again is the top thing that we're looking for when we're looking for how this company performs each quarter and each year. It is something that I think should go smoothly.
If you look at the stock, I mean, it's been largely basically range bound over the past decade, really. I mean, there's 2 periods of outperformance there. What are the key areas of opportunity here now for DeMauro, Matt? What do you think he focuses on?
Well, the way we're looking at it is Experiences needs to continue growing while keeping margins high, but streaming also needs to be an area where you continue to get the high growth and continue to increase profitability. So they've been doing that. As far as why Disney's been so bad as a stock performer over the past decade, really, we've been in the midst of the decline of traditional pay television, and Disney has been hit by that and this transition into streaming, which for a long time wasn't profitable. Disney has performed actually much better than a lot of its peers in traditional media, but it hasn't been immune, and it's been getting past that. The nice thing for Disney, and unfortunately they now are stopped reporting this with detail, but linear networks on the entertainment side have gotten to the point where they're almost inconsequential to the overall results. And so that's a business that we know is going down to about nothing eventually. But Disney's largely past how much that's going to hurt, which is why the detriment from having that business isn't going to be as noticeable anymore. It is a reason, though, why streaming needs to succeed. And then sports still has, the sports segment, largely ESPN, still has a lot of exposure to traditional linear television. And that business we're not looking to grow necessarily, but it does need to stay stable. And it's been doing that, and it is a key for the company. But that's an area that for the industry is not an area of growth that Disney still has a lot of exposure to. But with the composition of its business being more growth oriented, we feel pretty comfortable that Disney is undervalued here. And it's not to say that the near term won't face some headwinds, largely from headlines or from maybe macro events. Yesterday, they were talking about how in the US, they've actually seen a little bit of a dip in tourism to domestic parks. And so short term, that type of thing is a headwind, and it's something that we've contemplated and is in our valuation. But over the long term, these are healthy growth businesses with a lot of those more dying businesses becoming much less part of this company. So we think the outlook should be a little bit more optimistic.
Matt, as always, so good to have you on the show. Thank you.
Thank you.